Hello, good evening, everyone. Welcome to Property Zone Live, and I'm Sean Lee here. So today I'm going to share about one of the most important announcements they made last week by the Central Bank of the United States, which is the Federal Reserve. They have actually hiked their Fed fund rate by 0.5%, or in technical term, people call 50 basis points. So 50 basis points is equivalent to 0.5%. Now, let me rewind the things a little bit of why this thing is so important. As you know, the last 2 years we were battling with COVID. A lot of countries' economies are affected, business are down. In order to help people and help the country, to get back on foot, to actually overcome this crisis, central bank around the world, including Federal Reserve, has basically printing a lot of money. A lot of people know about it, and reduce the interest rate drastically. All right, to make things easier for everyone. So what we see is people tend to borrow more, people tend to spend more, business tend to expand more. But this thing is not a permanent solution. This thing is not going to be a permanent phenomenon. So ultimately, when the interest rate remain as close to zero, it has to come back up again. So whatever is up has to come down, whatever goes down has to come up eventually. So that's a scenario of it. While the 0.5% interest rate hike was expected, it was not like unexpected, it was expected by almost everyone, okay, that the Federal Reserve will increase the interest rate by 0.5%. But what people didn't expect is actually the drastic response, the reaction from the market. When I say market, it's not just about stock market. It has been about bond market, even cryptocurrency, and even the oil prices. So the impact of this time, the rate hike is really, really impactful, to put it short. So the main reason that the Federal Reserve need to hike the interest rate above the normal norm. Normally, they will increase the rate slow and steady, 25 basis points is their norm. To have the 50 basis point, the 0.5%, the last we have seen in this quantum is more than 20 years ago. So can you imagine that? And the main reason the Federal Reserve need to increase the rate so drastically instead of 25 basis point is because the high inflation rate. US is experienced a high inflation that they haven't seen in 40 years. Yes, you're talking about 40 years. And in fact, just March, not too long ago, they have registered 8.3%, 8.3% inflation rate. That's ridiculously high. And just a couple months ago, Federal Reserve Chairman Jerome Powell has mentioned that inflation is just a temporary thing. But they have changed the tune. They say inflation is here to stay. That's why they need to be proactive in fighting this monster of high inflation. That's why raising the interest rate is one of the most common tools they use. Not only that, other than increasing the interest rate, they're also talking about reducing balance sheet. What? Federal Reserve is not a business, it's not a company. How can they have balance sheet and what are the things inside the balance sheet? So in fact, as you know, Federal Reserve, they will buy bond from secondary market, from primary market, issued directly by the US government. But most of the time, they will buy from secondary market. So when they buy, they need to pay. They actually put the money to the market. But when they actually start reduce their balance sheet, means they are reducing their holding of their bond. They are selling the bond to the market, and in exchange, they are taking the money out from the market. The liquidity of the market will reduce. So therefore, when the Federal Reserve say that they are reducing the balance sheet, they are basically taking money out from the market, and this creates some concern, and in fact creates some panic, as we can see for the past 1 week. Okay, now come back to the topic today. The three things we need to know about the latest rate hike, the 50 basis point by the Federal Reserve is first, to be honest, this is the beginning of a tough journey. It's not a one ad hoc thing happens and We wait for this settle, and it's not going to happen again. In fact, Goldman Sachs had just mentioned that we are expecting to see 7 times, possible 7 times of rate hike this year. So what really matters about this time is, first of all, the quantum, whether it's 25 basis point, 50 basis point, even though 75 basis points is quite unlikely as mentioned by the Federal Reserve Chairman. So the quantum of it, the frequency of it, right? How frequent they will actually hike the rate, it will matter as well. Okay, not just only the quantum, but also the frequency. And when they actually start increasing the interest rate, it's going to be a tough journey for a lot of business, for a lot of people. For business point of view, your cost of borrowing, as you know, if you're in a business, even you are not in a business, you will know that many people do business taking a financing. Financing, they need to pay back from time to time, your monthly installment. So when the interest rate is increasing, the cost of financing, the cost of doing the business will goes up as well. Okay, so it will impact the margin. And second thing, emerging countries like Malaysia will be in a dilemma. The dilemma of whether they'll follow the US step to increase the interest rate, or they will maintain the interest rate to create a comfortable environment for the business. It's yet to be seen. But let me just share with you one slide. I'm just going to share one slide with you today. It's going to be interesting. It's a historical data of US and Malaysia interest rate movement. Okay, just give me a second. Let me just put it up. Okay, so there it is. So basically, this is a chart of the interest rate. In US, the interest rate will be using Fed fund rate as a benchmark. And in Malaysia, at the bottom, you are seeing Malaysia overnight policy rate. We'll use OPR as a benchmark. So this chart was started, I think, close to 2012 and all the way to 2022, which is now. So we talk about 10 years movement. So of course, what you are seeing is that the lowest interest rate US is having using Fed fund rate as a benchmark is close to 0.25%. And starting from the year of 2016, you can see they are increasing the rate aggressively. But because of the COVID hit, it also reduced the interest rate like a slide, more aggressively. It maintained for 2 years. Then it has a 25 basis point increment back in March, and then 50 basis point just last week. So this is the Malaysia one. Okay, we also see a rate reduction aggressively back in year 2020 for the past 2 years. Our OPR rate is lowest of all time at 1.75%. Now, the first thing I want to point out is actually during the normal time, our interest rate was close to about 3%, as you can see, during the 2012-2014 period, while the US interest rate was at 0.25. The gap, okay, the important is the gap. The gap between US and Malaysian rate was at a high of 2.75. 3% minus 0.25 is 2.75. But at the peak of it, when interest rate of US keep going up close to 2.5%, our OPR was 3.25. So suddenly you see the gap from 2.75%, the gap suddenly reduced to 0.75. Okay, this is actually how close the gap is. So back to now, at the point of 1.75% and the US interest rate is 1%, again, you're looking at 0.75%. So what you are seeing here is the historical data, but also I want to highlight to you the gap. It could be as low as 0.75%, but also could be as high as 2.75%. So it gives some room for the Central Bank of Malaysia to do some maneuvering. That's one thing. So now why I say there's a dilemma, actually what's the main consequences if the Bank Negara follow US and increase the interest rate? As you see, when they increase the interest rate, it will be tougher for the business to do business because the cost of doing business increase. The main reason they want to do it is if they don't increase the interest rate, a lot of the fund, whether with a fund managed by insurance company, retirement fund, sovereign fund, and etc., they will be moving out from emerging market, including Malaysia. They will flow back to US because US giving them higher interest rate. Now, you may say that 0.25%, 0.5% may be not significant, but if you're talking about a fund size of billions or even trillions, every single basis point counts. So that is the reason, no, if they increase the interest rate, they will be able to maintain the attractiveness of ringgit and keeping the fund in Malaysia to a certain extent. All right. So in a nutshell, Malaysia is caught between a rock and a hard place. It really depends on what are the priorities: to keep the ringgit strength or to make the business life, the economy activities in check. That's the thing. Now, when we talk about interest rate has actually a very dominant impact on the ringgit, the currency value. Don't forget, I think let's do some history revisit. Back in 1997, that was the year I went to US. So I can remember vividly in May 1997, the US to ringgit was 2.5, right? 2.5 ringgit, you can exchange for $1. That's how strong the ringgit is. So 3 months later, back in August, there was about to fly to US to study. Suddenly you see an increment. Okay, the ringgit depreciate further to 2.8. Instead of 2.5, you need 2.8 in exchange for $1. Hey, the 30 cents means more than 10% increment. But little did I know, 1 year later, 1998, our currency was further depreciated at 4.5% before it was pegged by Tun M at 3.8. So what I really want to highlight to you, actually the volatility of foreign currency is really uh, volatile and can be, the quantum is very big. Okay, back in 2022 now, no, just not too long ago, we are seeing ringgit was 3.9, then 4 ringgit, 4.12, 4.2, and after the rate hike, we are seeing at 4.35%. Sorry, 4.35 ringgit, almost 4.4 ringgit to $1. So the volatility of the currency value, need to be kept in mind as well. Now, number three, there are other challenges. There are challenges faced by other continents, other parts of the world when US is increasing the interest rate at the moment. Number one, Europe. So what the major challenge Europe is facing now is because of the war between Ukraine and Russia. The energy prices have shot up tremendously. It came down a little bit, but it's still higher than the average data. So it also means the production of goods, the manufacturer, the plants, the factory have to increase so much in their production cost, which is very bad for business. Of course, China now, they are locked down. No, China it's actually the world factory. Nobody doubts about it. They produce so much, okay, goods and services and export to the rest of the world. Previously, at the beginning of the COVID, China was the one that's pulling the whole world economy up. They are like an engine of the train to pull because when everybody's still in the lockdown. Now you can see in Shenzhen, you can see in Shanghai, and possible in Beijing now, the lockdown policy is dragging down the China economy. All right. So these are the other parts of the things. Now let's back to the interest rate. As I mentioned, a lot of countries will follow US once they hike the rate, once they have inflation going up tremendously in their country. But there's actually one country that do the other way. When they have high inflation, they did not increase their interest rate. that actually reduced their interest rate by 5%, not just 0.5. I'm talking about 5%. And the country is a very popular tourist destination. Hot air balloon, hot spring. Yes, Turkey. Turkey, the currency, lira. So what happened is in April itself, Turkey registered 70%, 70 inflation rate. Okay, biggest since 2002, 20 years ago. And their currency has depreciated more than 44% against USD. So by giving you this number, even though you are currently not staying in Turkey, you can imagine the challenge the people are facing on day-to-day life, getting medical supply, getting food, getting everything they need, where they need to import from overseas because their currency has depreciated so much. Okay, now third, stock market now down. The recent rate hike last week has caught stock market, especially the technology sector, has melted out. Okay, even though at one point the stock market has gone up 900 points when the Federal Reserve Chairman said that 75 basis point increment was not on the table. The market was actually stabilized for a while. Dow Jones goes up by 900 points. But only one day later, roller coaster ride strike. Dow Jones, alongside with, of course, other market index, has gone down by 1,000 points, erasing the previous gain. Now, if you look at Nasdaq, which is the worst hit sector in the recent rate hike, okay, technology. Nasdaq was down 5% in a single day on last Friday. And just a few days ago on Monday, it dropped another 4%. Okay. If you look at from its height, it has dropped more than 25%. Okay. Now, why technology sectors are so badly hit? Because when it is considered higher volatility, higher risk with higher reward, the sector of technology. So that's why you look at the PE, the valuation is higher. So when the market is positive, filled with hope, positive sentiment, people tend to be more risky. But when the things turns around like now, right, people are so panicked about the market. Technology stock with high PE, high valuation will be the first to get hit. That's why people are selling. Not just technology stock, cryptocurrency, the Apex crypto, Bitcoins that you have seen, Ethereum have seen, they all came down more than 50% from its high. Okay? Not only that, bond market cannot escape from the recent chaotic movement. So at the moment, what we are seeing now is like most people in the market, they are not talking about rate of return anymore. They are talking about preserving their capital. So even big asset, even stock, cryptocurrency, bond market, they used to have negative beta one, suddenly all come down together. Okay, now, of course, in Malaysia, we are blessed with two things. As a country to weather this challenging time, first, of course, we have crude oil. The high crude oil prices has actually helped Malaysian government a lot. As our CEO Kasha pointed out, okay, it shall reduce the budget deficit and give the government more room for fiscal maneuvering during this challenging time. Every $1 increase in the oil prices, crude oil prices, will actually contribute 300 million ringgit. So $1 means 300 million ringgit extra revenue to the government. So that helps. And second thing, of course, we have this palm oil. So palm oil prices, you can see, has going up tremendously, especially when Indonesia decide to ban their palm oil. They're actually banning it. They actually prohibit the export of their palm oil. Therefore, the supply of the palm oil will be reducing, and therefore the market share of Malaysia palm oil, will have a market share, bigger market share. So there's are two good things. If you see Malaysian government as Malaysian, we are looking Malaysian government as a whole. How about individual wise? All right, okay. I think this is a common sense. I think this is also advice given by so many known analysts, planner, advisor. During this challenging time, we as individual, right, we can't control the external factor, but what are we can do within ourselves? I think first there are three things we need to do with ourselves. First, if possible, reduce your debt level as much as you can, because variable loan, the loan with variable rate like mortgage, will tends to goes up if Malaysian government central bank increase the rate accordingly. You will see step by step the installment amount, especially the interest portion of it, is going up. So second thing you might not do is don't put all eggs into one basket. Diversify your things. Okay. So maybe one of the things you can look into is don't keep all your asset in just one single currency denominated account, denominated platform. Diversify a bit so that you you can actually benefit from some of the US dollar appreciation. Of course, the third is hedging. If you are doing a business, especially you are taking a loan in USD, if you need to buy stuff in USD, perhaps this is a time you should look into hedging your positions by reducing your business risk due to the uh, potential increment in US dollar. Okay, so today is a bit lengthy, but I think a lot of informations you can actually look through in the web, through in the internet. And I just want to take this opportunity to summarize it, from the rate, from the ringgit versus USD currency, talking about what happened to the market, and at least we are more prepared in this um, any challenging time ahead. So with this, I'm going to conclude my sessions. Thank you so much for your time. I hope to see you in the next session. Okay, this is Property Zone Live, and I'm Sean Lee. Thank you very much. Bye.